I hope everybody's doing well, getting out in nature, enjoying the beauty of it, trying to find that stillness. But I just wanted to show you what I'm looking at right now. This is the Consumer Price Index, CPI, which is the measurement of inflation. You can see this red line is the official CPI, and I looked at it's 8.6 right now, so it's going up. I don't think that increase was necessarily priced into the markets, but that's here nor there. That's not what I want to talk about. But you can see the 1990 base calculation, the government calculation. The red one is the new one. It's the official one. It's what they changed it to. Seems the past couple of decades. But yeah, we have it's over 10, more like 11. And then using the 1980 calculation, we're more about 16, which makes more sense if you look at the things that we have to buy. Just intuitively and looking around, I mean, this one seems a little more realistic than even the, I mean, that, you know what I'm saying. We're paying more than 11% more in the past handful of years, I feel. But that's no here nor there. That's just something that's interesting. It just came out with a new number. So they're going to taper. They're going to increase interest rates. They're going to make debt more expensive. And that's going to lose investor confidence. And just looking at the MACD, now I don't trade with the MACD. I'm not a trader. I look at the stock market rarely, but I've been watching a little more lately. So MACD is lagging usually, or at least for crypto, but the crosses are important, especially when they reach these rare levels up so high, which I don't think has ever happened, at least in the history of this chart. The last big cross, which is when I believe this is the 12 EMA, exponential moving average, that is the 26. But we don't need to get into what is going on with the math in here. Just look at when this blue line crosses below, that's more bearish. And we have these bigger bars on the histogram when the divergence between these two lines is that wide. But you can see the last time, I mean, we never even been that high yet. Back here in the internet bubble, we have this cross here. And how much did the NASDAQ lose there? Because it's probable that that's a possibility, especially if they're serious about stopping inflation, but they want it high right now. That's 82%. That would probably put us down, let's see, I don't remember. I mean, 75% would bring it back to the high of the internet bubble. 83%. There is some significance there. Now, I'm not saying this is going to happen, but it's probable. The probability is increasing. I mean, all of the MACD crosses on the monthly have some importance. This is a 50%. I mean, even if we get a 50% drop, that's right in line with this support. I mean, this is what I'm thinking. I don't think they're going to want to see it go lower than that. If they do, then they really want to crush people's wealth, really. But that's another topic. We're just looking at the data and what it says. That's not the Bitcoin chart I wanted to watch. Doubles here. Well, it's not loading, but it's highly likely we keep going down. And this is the S&P. I mean, we've never been that high in the S&P either. So, I mean, last cross with histograms below that level to the downside, and these larger, bigger picture crosses. We'll see, that's 56. If we actually hold this level, then inflation is going to be getting a lot worse, and people are just going to be speculating anywhere they can, thinking that they're buying the dip here, and we could get a rally and then a correction back to this 24, 25. But if they were trying to reset everything and roll something else out, or push libertarians all into crypto, and have people sell everything because they don't have enough to live and keep up with the inflation, then we're looking at that 86% level, which at the S&P I find that more hard to believe. It never really, it's not quite as speculative as the tech, the NASDAQ. That's more risky. That's like Bitcoin. And then Bitcoin here, last big cross. See, it happens late in crypto. The cross was out here. I'm saying here, we already dropped substantially before the cross happened. Now we're in it a few months. We still could have more months to go. And everybody's expecting 29 to hold. But just looking at a bigger picture and just looking at everything else going on, yeah, I want to see if this 19 holds. And this isn't financial advice at all, but that's when I'm going to be starting to go heavier. I mean, I'll probably be honestly dabbling a little sooner. But yeah, if we get back down to this 15K, 16K, that's a phenomenal opportunity. And we're in that zone as Courtney says every time. But I don't want to go over this again. I want to make this shorter. But yeah, I mean, interesting times that's going on. Yeah, I mean, if you don't have to sell everything, then just hang on and be ready to fucking buy more soon. So, big moves coming. It's likely down. All right, everybody. Hope everybody's well. Get outside in nature. Try to find that stillness, and eat to live. Love yourselves. Believe in yourself. And never stop learning. So, take care, everybody.